All right. Hello again, everyone, and welcome into today's webcast presented by PwC Insights Officer, Law Firm Accounting, the Biggest Challenges. Again, my name is Carolyn. I am the host of today's webcast. Please take a moment to open the chat module by clicking on the chat bubble icon. It's at the lower bottom portion of your screen. This will then open a chat area in the lower right-hand corner. You'll then see a drop-down menu with options next to the words to. If you have any technical problems today, please send me a message directly. You can chat to me as the host. If you have questions or comments for our presenter, you can chat to all panelists. And if you have comments or questions you would like for everyone to see, please chat to everyone or all participants. A recording of this webcast will be available tomorrow, and we will send all registrants an email tomorrow with that proper link. As I said before, the sponsor for today's webcast is PwC Insights Officer. Today's presenter was intended to be T.C. Whitaker, but unfortunately, T.C. is without power right now in Atlanta due to Hurricane Sally, as I'm sure some of you can relate. But no worries, we're going to charge ahead because Oliver Lash-Williams, who is T.C.'s colleague, is here with us. And Oliver is the head of marketing at Insights Officer. He has worked around legal technology for the last 5 years and advocates on behalf of the Insights Officer customers. And I know in talking with Oliver just a few moments ago, he will do a fabulous job. So Oliver, I'm going to go ahead and pass the ball to you, and feel free to take it away.
Hi there, Carolyn, and thank you so much for introducing me. Hi there, everyone. Delighted to be here. Again, apologies from TC, who I think you can see on screen in front of you. Sadly, as Carolyn said, the weather has taken out his power right now. But I work awfully closely with TC, including on the story, talking about where we've been the last couple of years and the learnings we've taken from that in this presentation. So stick around, and hopefully we can have some fun in the next hour. Please do pop any questions into chat along through, and I think we'll have 10 minutes or so at the end. So to move on to what we're gonna talk about today, we're gonna cover a few things. So Insights Officer is a automated bookkeeping back office and business intelligence KPI solution for law firms from PwC. We're not going to be talking very much about Insights Officer though today. We're going to be talking first of all very briefly about PwC as a firm today, what it looks like. Then we're going to talk about where we started with Insights Officer and the challenges that we've encountered in the last 2 years with our law firm clients. So these are very much challenges for law firms every day of the week. And then at the end, we'll look at how to solve some of these problems, answer some of these challenges. Just one thing to note, I saw in the registrant list some of our larger firm clients or possible clients here. Insights Officer, we work almost exclusively with small and medium-sized law firms rather than being the team that works with larger law firms. But our learnings from the last couple of years, we believe, are universal to the whole of the legal vertical. So if you're from one of those larger firms who maybe knows our law firm services group, do stick around and hang out with us this afternoon. So let's dig right into it. So who is PwC today? So our purpose here at PwC is to solve important problems. You probably know us as a Big Four accounting firm. You probably assume we're focused on Fortune 500s and AmLaw 100s. The title of this section is a reference to a recent PwC campaign, Not Your Father's PwC. We do still serve 60% of the AmLaw 100, 85% of the Fortune 500, and we have 55,000 people across the US and Mexico, aimed at many of them at those markets. But we also worked with, in the last year, 100,000 entrepreneurial and private businesses. And that's really where Insights Officer sits with PwC. And a few years ago, PwC looked at how we could work with more of the market than we traditionally did, and we looked at product solutions as a way to do that. The last couple of years of understanding how we can help some of those small and medium-sized law firms has been quite a process for the team. We have gone through a very standard startup ideation process where we started by interviewing hundreds of law firms around the US, learning and hearing what their challenges were. We provided an answer to those challenges, which we're going to go over in a second. And it turned out that what we thought was the answer actually highlighted a bunch more challenges. So it's been quite a fascinating time. And so let's just recap for you quickly where Insights Officer started. So Insights Officer started a couple of years ago, as I said, with this classic startup ideation process, talking to a bunch of small and medium-sized businesses. We didn't start off in law. We started off actually talking to a wide range that included law firms and trucking companies, and obviously two more different types of company you couldn't find, and understanding what we thought their challenges were, particularly financial challenges, but also going outside the financial. And what we landed on initially was KPIs, and I know that many of you will know what KPIs are, but a surprising number of people ask the question, what is a KPI? And I have to say, it wasn't too recently I asked that question myself, KPI being a key performance indicator, or just a metric that makes a difference to your business. And so it won't be a shock to you that that's where we landed first. How we got to KPIs is through that early process of talking with law firms, particularly smaller and medium-sized law firms, as I said, and realizing the admin burden that faces law firms. Clio, the legal practice management software, have this statistic, came out in their 2016 legal trends report, that 5.6 hours of the day for an attorney in a medium-sized law firm, a small-sized law firm, is spent on non-billable tasks, which sounds quite unbelievable. I remember when I joined Insights Officer and I was talking through how we were working with our clients, and I posed the question to TC actually, so why does this matter? And there were three of us in the room, and he looked at me and he said, Ollie, what this stat means is if I take you and Jonathan, the head of customer success, right, and I walk you over to the break room and I sit you down with a coffee and with my Netflix password up on the big screen and put lunch in there and shut the door at 9 a.m. and I take you out at the end of the day and I do all three of our jobs, that is what's happening with the burden of administration to these law firms. That 2/3 of the day is spent on administration that doesn't add value to the bottom line, which, again, sounds quite unbelievable, but is absolutely accurate. The data behind it from Clio is very detailed, and they have access to a wide range of law firm data. So why is it possible that this can exist as a business model? It's because actually law firms have, relative to other industries, high cash flow. It doesn't mean that everyone in a small or medium-sized law firm is making tons of money. That's not what we're saying here. But what we're saying is that cash flow is high enough that a great deal of non-contributing work can build up before it affects the the ability of the firm to continue operating. So this is a really big challenge, and one that we wanted to help tackle, certainly in terms of looking at financial admin in law firms. But it's a real positive as well, because it means if you can move the needle in a law firm, reduce some of that inefficiency, you can do much better. So what we did was we did some more digging into why exactly this situation existed. There's lots of talk at the moment about the billable hour, about whether that's a good or bad business model for law firms. People are looking at subscription models, fixed fee. All of this is up in the air right now. A lot of the challenge around productivity is potentially down to that billable hour model and reliance on humans delivering workflow. And this makes law quite a tough business. It means that you keep having to add hours into the day, and it means that attorneys are doing that, working with some very sensitive and high pressure issues. So that's part of it. The business model itself and the type of work makes law a tough business, and that makes the administrative burden a financial one as well. We found also that law firms sometimes don't have easy access to levers for growth in basic financial statements. A lot of this is because of the nature of law firm cash flow being inconsistent. It goes in peaks and troughs. And so that means that the way it's reported can look increasingly good or bad in different situations. And we'll talk about that as we get deeper in. So we discovered that the levers for growth are not easy to comprehend. And really, that often law firms, we found, small and medium-sized law firms, didn't understand the actuality of their cash flow in a given moment. We spoke to many lawyers, and it's astonishing that lawyers will come up to our team at an event or something like that, and we'll kind of come out the gate, obviously seeing that we're in accounting, and say, well, I'm not a numbers person. And our team likes to kind of joke around with that and say, really, you're not a numbers person? How much did you bill last year? And of course, an answer can come back very quickly about billing. But then we start to say, okay, well, when you look at your firm's operations and financials, what's margin like in different practice areas? How are you deciding which practice areas to do more of or less of from a margin perspective? And of course, margin is what leads on to ultimately profitability. And that conversation becomes much more challenging. And the team will often meet people in the legal vertical saying, in a conventional way, margin can't be calculated. It's what we do is different, right? And we would often humbly disagree with that. But what this means is that the financial challenges for law firms are magnified, because taking hold of financial challenges and solving them is reliant on understanding the data. So many of the businesses we work with outside the small and medium business vertical, you look at key performance indicators, key data points, and you go to those data points and they tell you in a really simple way how a particular part of your business is performing. So they're sort of signposts, either positivity or negativity, red or green. So one you've got here up in screen is profitability. and shows you margin. And you look at that statistic and you know, if margin increases, it's green, it's good. If margin decreases, it's red. And it reduces some complex issues down to a simple one. And many of the law firms we spoke to weren't managing finances in this way. Specifically, law firm leaders were looking at financial statements for information. And we really find that financial statements for an ongoing temperature check don't always tell the whole story. KPIs are much more effective, particularly because of trends, right? If you look at a statement, if you look at something point in time, you see a snapshot. But again, with what we can see on screen here with a KPI, often what you want to see is a trend, right? You want to see in comparison to last week, last month, or last year, what's changed? Have things moved in a good direction? So is revenue up and is cost down? That's a really good direction. Or is cost up and revenue down? And again, these sound like very simple subjects. Many of you guys on the call, I'm sure, are thinking this is kind of stating the obvious here, which it is. Except that, again, if you're looking at point in time, and if you're looking at points in time that might have errors or have issues with timeliness, it's not very easy then to extrapolate those KPIs. So what we did about 6 months into these conversations with law firms is understood some of those challenges around accessing financials and taking financials and turning them into trends. And we built a KPI dashboard, and you can see an image of it here. I've been talking to it, right? So we thought, okay, it's a really simple answer. We'll put up these KPIs. You can log in, you can look at them, and you can go, how am I trending? Wonderful. And then when we started socializing these early KPI dashboards with our clients, this is where things got really interesting, because our clients or those we were socializing this solution with would ring us up and would say, the dashboard's wrong, right? It's not, this isn't true. I know that my business, I know that my firm doesn't look like this. And as a startup at a very early stage, we'd go and we'd look at things, and sometimes you have to tweak the calculation. But ultimately, we found that the dashboards were usually telling the truth. And the calculations were calculating what they should have been calculating. And these people we were working with would say, but look, I just know that things are healthier or less healthy than this. And so we said, okay, let's look backwards in the process. It all goes into the KPIs. And this is something we found universally among so many clients, these challenges. Let's look at the data that goes into the KPIs, which we hadn't touched. And let's look at what's happening. And what we found was that the biggest challenge for many of these KPIs was one of data. The KPIs were accurate, but the data going into them was wrong. And as with any analytics or any business intelligence, whether it's purely financial or as with our KPIs, financial data crossed over with operational data, like data from the time and billing system, which gives you some of those KPIs around profitability and that kind of thing. When you layer data over and when you layer trend data over, that's when it gets useful. But of course, if the data is flawed, and that's a strong word to use, but really what we were seeing, if the data is flawed, then the KPIs are flawed themselves. And this was a really tough conversation for us to have, because we were saying to our clients, look, don't look at the KPIs, look at the data. We looked at the data with them and we said, we're finding errors in these financial statements, where maybe numbers are late, and it felt like there should be some bigger, great learning underneath why these KPIs are wrong about the business of law. But it really was simple that we were finding that the challenge was basic bookkeeping and financial administration and management, and specifically timeliness and accuracy, right? And accuracy is an easy one. If statements aren't accurate, that's a problem. And we all know that. We know that in our personal life as much as our professional. But accuracy is particularly a problem when you're trying to view trends, right? Because what happens is maybe someone's not full-time responsible for handling financial data, or the person who's responsible is off. So money comes into an account, the owner or practice area manager knows that the money is on account. Maybe it's money that's in a retainer account, so it's already in the firm's sphere, but it isn't moved at the right moment, isn't moved as soon as the payment's supposed to happen, which is a challenge in and of its own. Or maybe the payment is just accounted for late. But what happens is the person who knows the payment's been made looks at a KPI that doesn't account for the payment, and that KPI is wrong. And as I said, this can be down to something simple as someone taking time off, or someone being part-time responsible for accounting and bookkeeping. Then affects how you view that financial data. And also with humans entering data, there is always the potential for errors. There is always the potential that someone slips on a key or something. And this is normal human stuff. So why did we see this particularly in law firms and various other small and medium-sized businesses? It was really down to those issues of it either being a part-time role or it being a role that people would push off and that kind of thing. It wasn't considered core to the life of the firm. So we also saw something else, which was that a lot of processes in law firms are either manual or are semi-manual, and quite often based on using paper, for example, rather than digital tools. So apart from the human side of accounting, which is always there and everyone struggles with, the processes underlying that challenge were really, really broken. And we wanted to dig in to just, for example, one process. And so we looked at accounts payable, right? So when we looked at accounts payable, we saw invoices received by snail mail, right? Paper invoices, which we see across many businesses. Of course, when an invoice does come in paper, it sits on a desk. Eventually, a team member might review it, draft a paper check. If at that point, that stack gets passed to someone at a point in time often, that other person either approves the payments manually or writes the checks, and maybe a third person does. So this stack of paper is getting passed around an office, right? Around 2, 3, 4 people. That takes time, that takes effort. Eventually, this all gets put in envelopes and sent out in the mail to then reach the payee a couple of weeks later. And particularly for those of you from larger firms who are saying, well, this is a small firm challenge. I kid you not, in a previous life, I've had some of the world's largest law firms settle software licenses by paper check, by like 6-figure paper check. This process has holes and risks. particularly the sending element of it. So when we realized this data problem existed and we looked at the process that was driving the data challenge, because a data problem is always a process problem, we started to look for ways that clients could remove the human elements of this process and remove steps in the process. A really good example of this is a solution like Bill.com, right? It's one of many solutions for digital payments out there, absolutely. But you can capture invoices digitally. You either forward them to an email inbox or you scan them in and forward them. And then once they're in Bill.com, there's an approved payment button to pay out to the payee once the payee is configured. So it's very interesting that cuts down a bunch of steps and also cuts down cost. Bill.com estimates that 26 bucks is what it costs to mail a paper check. So if you send just 76 checks a year, that's $24,000 a year of cost in paying with paper checks. And most businesses, I would say, are well over 76 checks a year. So if you go and fix the process, that's fantastic. But I mentioned there that the digital solution that we like is Bill.com. If you fix processes, but you don't fix the technology, you have a real challenge. Because if you don't have the digital solution there, right, what you're left with is still essentially walking bits of paper back and forth. So Kelly, you just asked a really pertinent question. Please, I've been talking for 27 minutes. Please, more interruptions. But Kelly, fantastic. Sometimes cutting down steps eliminates internal controls. How do you keep the controls in place? By making the process more streamlined. So Kelly, that's an amazing question. And actually, Bill.com is the most fantastic answer to that question, which is that you can have approval steps in many, many digital processes. It's definitely the case with Bill.com. For example, for some of our Insights Officer clients, right, there is an element of Bill.com that we manage on their behalf, but we absolutely, definitely, totally cannot make a payment for a client, right? So that the client has a digital button to approve that. And so it very much rests on the tools you choose, but absolutely, if you're fixing a process, you're right that to a certain extent you do have to digitally replicate that walking back and forth. You can't just give someone the power to start like making digital payments, for example, all over the shop without them being approved. And that can often be an internal communications challenge, right? Because you can have teams who are quite happy to use a digital solution, but then the person who's responsible for approving the solution at a senior level, and we see this is not just a challenge for law, but across many verticals. Someone senior can then say, well, I like the process the way it's always been. And I want to see it on paper, or I want to write that check. And so we have to have a very open conversation at that point and go, one, be reassuring and say, look, it's okay. You can have those approvals there digitally. And secondly, talk about the cost and insecurity of maintaining all of this on paper, the cost of those checks and that sort of thing. But Kelly, you're absolutely right. Internal controls are very, very important to the process. And streamlining can't reduce those or eliminate them. That would not be good at all. So saying that legacy technology is a problem, one of the biggest problems with legacy technology is that it's on-premise or installed on a desktop. We very much are of the view here that one of the other things that's important about streamlining the process is that you have to have cloud technology, because yes, you definitely want, for example, those approval steps in place, but you're only going to end repeated data entry and replace manual work with automation, really, if those steps of walking things back and forth for each other are replaced by APIs exchanging data, right? So if Bill.com can talk to QuickBooks as an AP solution and a general ledger, that's what means you no longer have to walk paper between each other, but that also prevents you from having to enter information to one system and enter information to a second. Because if you don't have cloud-based systems and you put everything on technology that doesn't talk to other technology, you still have a situation where people are entering data into multiple systems. And when you have that situation, that's a massive, massive opportunity for errors. And this is not, please don't misunderstand me, this is not about the quality or skill level of anyone entering the data. It's absolutely simply the case that the more times you enter data into more places, the more likely you are to make a silly mistake. Like all of us do when, we try and use Face ID on our phones, and it takes about 3 times to enter the password. Simple data error, even on data we know by heart. So to recap where we got to over, and this was a 2-year process of discovery for us, of perceiving that, the law firms we spoke to wanted to have a better way to analyze financial data and information. That was the challenge they showed us. And our answer to that was stop reading statements and start looking at trends and KPIs, analytics, all of which feels like a buzzword. But when you take some intelligent people and some great CPAs like we're lucky enough to have here, you can create some wonderful KPIs and some really useful analytics. Information that actually moves the needle if you get it right. But what we found was that underneath that, of course it only works if the data is good and strong and accurate and on time. And that's the real key, right? Accurate and on time. So we looked at the issue of the data, and we found that, of course, the way to fix the data issue was to look at process. But what we found was that the process in law was fixed on either where it was really badly going wrong for our clients, either on paper or on legacy technology that didn't talk to other technologies. And that's really where the challenge lay. So we looked at a bundle of technologies that we built into Insights Officer, all of which are widely available, and anyone can go and purchase for their firm themselves. And they're just, one set of a bunch of cloud technologies out there. The important thing is getting onto cloud technology and getting that technology integrated, even if you do nothing else and don't think about how we solve the solution. And what we did was we took those technologies, we saw a couple of slides ago, we plugged them all together, and we built some amazing robotic process automation, which are just these great robots that go and do a lot of the bookkeeping and basic data management for clients. So we sewed them all together, we built these robots, and now with Insights Officer, we provide automated bookkeeping, accounting, and KPIs to our clients. Basic information like profit and loss statements or balance sheets, ad hoc reports like a packet of information, so our clients could sign up for PPP loans when that became necessary. And And the way we do that is we clear bank feeds daily, we reconcile trust weekly, and we reconcile credit cards as near to real time as we can, as needed. And we have a sort of factory model with all these APIs and these robots where in our solution, when we put the technology together, we close books daily for our clients and eliminate all of the reconciliations daily. And then we finally close books by the 5th day of the following month for all of our clients. And again, we're able to do that because of the level of automation. That's not necessarily going to be the case if you go and grab these software yourselves. But that's like one very, very sort of big step forward. The baby steps along the way are seeing the data problem, seeing the process challenge, and solving it with the technology. Whether you choose to come and talk to us about Insights Officer and how we solve that problem ourselves. So look, thank you all so much for spending time with me. I'm sorry I'm not TC, but it's been delightful to talk you through some of the things we've seen. And I hope the learnings have been, or our discoveries have been interesting or useful to you. It's been an amazing couple of years we've had getting to the point of having something really useful to help law firms with. You can see up there, it's quite small, but insightsofficer.com is our website. We'd love for you to go there and get in touch with us, and we'll be emailing you afterwards. But again, Kelly, thank you so much for your question. And does anyone else have any questions about the challenges we saw in law firm accounting over the last couple of years and how law firms can iron them out? If you do, just pop them in the chat there.
Great. Thank you, Oliver. This is great information, and thanks for stepping in to do a great job. And like Oliver said, if anyone does have questions, you can chat to us in the chat box. And if Oliver's not able to get to them today, we can certainly have him contact you by email. We will send an email tomorrow with a link to the video recording of today's webcast. And you can check that out there and also forward it along to any of your friends and colleagues as well.